All right, welcome to this explainer. Today, we're locking in on the ultimate blueprint for protecting your hard-earned assets and really mastering long-term risk management. Now, I know risk management can sound like a super dry term, something you'd hear mumbled in a stuffy corporate boardroom, but honestly, understanding these mechanisms is absolutely one of the most strategically empowering things you can do for your personal life. So we're going to strip away all that industry complexity, focus purely on the structure, and show you exactly how to build an unbreakable financial shield.
So picture this. You've been working incredibly hard for years, saving diligently, building up this great nest egg, and then, boom, out of nowhere a sudden illness, a major accident, or a disaster strikes. Without a proper financial safety net, that single, totally unpredictable event could literally erase everything you've built. Every last dime. It's a visceral, terrifying scenario, right? But it perfectly establishes the massive, real-world stakes of what we're talking about today. We aren't just looking at abstract numbers on a spreadsheet here. We are talking about your life, your security, and ensuring your future doesn't get derailed by circumstances completely out of your control.
Okay, let's dive into this structured blueprint. We'll start with part 1, the cost of what if. Then we'll move into part 2, decoding insurance basics. From there, we hit part 3, your essential coverage arsenal. And finally, part 4, securing your financial future. Let's kick things off with part 1, the cost of what if. And this brilliantly illustrates the massive contrast between two very different realities. In an uninsured scenario, a sudden emergency just results in devastating out-of-pocket costs. I mean, we're talking about the kind of severe financial shock that can lead straight to ruin. But look at the insured scenario. The emergency still happens because, well, we can't magically stop life from happening, but the costs are controlled. They're predictable. Because of policy limits, that massive risk is managed. You actually have a safety net. The financial blow gets absorbed by the insurance rather than completely crushing your personal bank account. Honestly, it's the difference between just hoping nothing goes wrong and knowing for sure you'll be okay even if it does. Moving right along to part 2, decoding insurance basics. First up, we've got the premium. Now, think of the premium as basically your subscription fee for peace of mind. It's the regular upfront cost you pay just to maintain your insurance policy. And rather than viewing it as just another annoying bill, try to view it as a strategic lever. It's the routine ticket price required for long-term stability. As long as you're paying this premium, you are keeping your financial shield active and firmly in place. Next, we have the deductible. Okay. Picture this. You're walking out of the supermarket, and you just watch helplessly as a rogue, runaway shopping cart careens directly into the side of your parked car. I mean, it happens. The deductible is simply the out-of-pocket amount you are required to pay to fix that dent before your insurance coverage officially takes over the rest of the bill. It is your initial financial responsibility, but here's the best part. It's capped. Once you hit that specific deductible limit, your safety net fully deploys. Which brings us to coverage. Now, coverage is the actual meat of the safety net. It defines the specific amount of risk that is shifted off your shoulders and directly onto the insurer. It outlines exactly what kind of devastating costs are going to be absorbed by the insurance company so you don't have to face them entirely alone. Simply put, the better your coverage, the stronger your overall shield against the unexpected. Let's move to and see how this builds into a real-world timeline. First, you take the proactive step to pay your premium, which keeps your policy active. Then, life throws a curveball, and an unexpected event actually occurs. When that happens, you step up and pay your agreed-upon deductible. And once that threshold is met, bam, your coverage kicks in, and the insurance company steps up to handle the massive financial burden that follows. Seeing this flow really highlights how all these different elements function together as a mechanical, step-by-step system designed purely for your protection. All right, diving into part 3, your essential coverage arsenal. You see, a comprehensive safety net isn't just one giant generic policy, it's a curated collection of specific shields. Together, they form sort of the holy trinity of asset protection. First up is health insurance. Medical bills are literally one of the leading causes of financial ruin, making this absolutely vital to shield you from massive illness or injury costs. Next is property insurance, and this goes for both homeowners and renters. This protects the physical dwelling you live in, plus all the valuable belongings inside it, from sudden disaster. Finally, we have life insurance, which provides crucial future financial protection for your loved ones if the absolute worst were to happen. Each one of these serves a uniquely vital role if you're truly being proactive about your planning. Now, what's really interesting about this slide is how auto insurance is actually broken down. It is not just a blanket policy that covers everything. There are three distinct layers here, and they protect against very different vehicular risks. Liability covers the heavy costs if you cause an accident and either damage someone else's property or injure them. Then there's collision, which is exactly what it sounds like. It pays to repair your own car if you hit another vehicle or, say, a light pole. And comprehensive? That one covers the totally uncontrollable situations. Think of a heavy tree branch falling on your car during a storm, or if it unfortunately gets stolen. Understanding these subsets lets you perfectly calibrate your arsenal to your specific risks.
Which brings us to our final section, Part 4, Securing Your Financial Future.
So, the crucial point is this. Proper coverage is not just another annoying monthly bill. It acts as a literal financial safety net. It actively shields you against emergency costs that could otherwise absolutely wreck your finances. It is absolutely essential for long-term asset protection because we want to make sure the wealth you painstakingly build actually stays yours, right? Ultimately, managing your risk through these specific tools is the true cornerstone of proactive planning. It is basically the only reliable way to ensure lasting financial stability in a highly unpredictable world. I want to leave you with this final, incredibly important question to consider today. Really take a hard look at your own life, your own assets, and your current proactive planning. Are you actually building a robust financial safety net, or are you just sort of walking a tightrope without one, hoping the wind doesn't blow too hard? I highly encourage you to take the blueprint we've unpacked in this explainer today and apply it directly to your own financial risk management. Stay curious, stay prepared, and as always, thank you so much for learning with me today.